Let's talk about Italian government bond yields. They've climbed to the highest levels in almost 3 years. Local stocks dropped amid concern that the populist coalition will boost borrowing in one of Europe's most indebted economies. Joining us now is Stephen Major, Global Head of Fixed Income Research at HSBC. Stephen, good to see you this morning. Thank you for joining Anna and I. Great to have you on a morning like this. We're just seeing BTP futures rally a little bit. I've started the show with this. BTPs, they're trading worse than Indonesian bonds. In other words, the spread is blowing out. How concerned are you about the political movements for the BTP market in Italy?
Well, yes, and we're thinking long and hard about it, Manus. It's going to be quite challenging. If you think about the 2-year BTP, it was in negative territory only a few weeks ago. So the yield has moved above zero. And who's to say what the fair value is for something like a BTP with this kind of backdrop? And as you said earlier in the segment, people can remember the yields of 6 or 7% back in 2012. The whole curve was flat. Now, I'm not going to say that that's our forecast, but I'm going to say that if you were building in various scenarios for what might come next, that has to be something that you might want to factor in. So it may be only a small outside probability, but there you go. I don't think investors are going to chase Italian yields downwards at this level. They've still got some adjustment to go.
Still got some adjustment to go. We've been talking about mini-bots, whether this is a parallel currency by another name. Is this something...
I thought it was some kind of robotic language.
It's got a scary name. It's got a very scary name, hasn't it? But does the idea of this look like a parallel currency, walk like a parallel currency? Is that what we're talking about here?
We know that the Greek government discussed this. So the idea has been out there for some time, and actually in the various manifestos there have been discussions, and there have been policy documents and leaks. So it's not like it's brand new. The thing is, this would be more worrying for the general EMU project if it was to proliferate. And that's why you get comments from French government officials about it, for example. So I think that people are worried about the fiscal side and any kind of departure from the policies that have underpinned EMU. And this could take a long time to work through. It's right to be focused on this because at the moment the market is valued as if nothing can possibly go wrong.
And there's a real fiscal risk, is there, here? I mean, Bruno Le Maire was cautioning around that, as you suggest, the French minister yesterday. Look,
in the last 10 years, there are a number of countries, and Italy is one of them, that have seen their total debt levels go up. Now, in the case of Italy, the debt challenge is more the sovereign side. Interestingly, not the private side. The private sector debt has been kept under control. Now, the sovereign debt isn't a problem whilst you've got the ECB there and the banking system to keep rolling the debt. Other countries, I mean, the focus has recently been on Turkey, for example, and there's Indonesia and the emerging markets, but these countries might be looking at corporate debt, in particular Turkey is. So for Italy, it's about the sovereign debt, and the fiscal debt has not come down in the last decade.
OK.
Stephen, there's a wonderful line on the MLive blog this morning, is that Italy has yet to do the full Greek. Now, with that in mind, people are saying that 2.4%, I'm talking about the longer end of the curve now, 2.4% is the litmus test as defining the Draghi put. The Draghi put, the ECB put being dead. Do you see the market having the potential to get to that kind of level before the ECB says something or does something demonstrable?
Well, looking at the yield on the screen, we're 3 basis points away. Is that right? We're almost there. I think you're right to focus on that. You're right to focus on that, Manus. It's certainly a key theme. Now, what we don't know is precisely what the ECB have been up to, because the numbers are shrouded in mystery, because you've got reinvestment flows, and sometimes they go over the capital keys, sometimes they don't. But it's my guess, I don't know this for sure, that the ECB has been at least on the key, if not above the key, for the last few months. And we're coming to the summer, which is a strange time because the reinvestment patterns change through July and August. Look, the ECB is in control here. they're the main marginal buyer. That is a fact. If you look at who's been buying the BTPs over the last few years, that's where they've been going.
And what's the most likely course for the ECB? To buy more because they want to calm the situation down, or to threaten to buy less because they don't like what they're hearing out of the new government?
You've laid it out perfectly well. And also you should put into that, Anna, the fact that the flow is coming down. They don't like to use the word tapering, but they have been reducing less. And I guess the next step is to reduce that even further. So, look, we have seen in the past the ECB has had some influence on policy in governments, and right now it has a huge amount of leverage in this monthly asset purchase. So I don't know which way it's going to go. It's a negotiation, isn't it?
Mm.
Stephen, can I ask you about the contagion impact, places to hide, how to play it? Our last guest suggested, look, they'll eventually all waken up and go, we can't allow this bond right to literally unpick itself. I'm looking at Spain versus Italy, Stephen. To what extent will what's happening in Italy stay within Italy and perhaps remain contained?
Yeah, so this creates buying opportunities, and in fact, investors need this disruption to be able to pick cheap assets. Now, in terms of the fundamentals, Spain is in much, much better shape than Italy. So let's list them. The debt levels, certainly the private sector debt has come down a lot in Spain. The overall debt position is much more manageable. The credit rating has been going up. There's a momentum in the right direction there. The reforms from 3 or 4 years ago in the labour market are now coming through and bearing fruit. So there's a lot of positivity around Spain, and people look at the longer dated forwards, which have returned to a level above 3%, as being reasonably good value. So, you know, I think it's interesting that these disruptions do present opportunities to investors. But I think the fundamentals for Spain are way, way better than Italy anyway.
So there's divergence within the periphery then. What does this do to the ECB's overall timetable then, Stephen? Is this a sort of not-so-fast Mario moment? Well,
look, we discussed this internally, and at the start of the year, the probability that the ECB would not hike this cycle, which means no hike in 2019, was probably only 10 or 20%. So today, that number must be nearer to 50, or maybe even higher. So think about that. They missed the chance to hike this cycle, and they're already at minus 40.
You think that's where they are now? They have missed their chance, or they're
the thing is,
getting close to missing the chance?
So it's about the incoming. The incoming data has been softening. There's a soft patch. We don't know whether it's any more than that. But what do we know about next year? Spring 2019, what will the world look like? What would have happened with Italy? Maybe it's just nothing. What will happen to data? Where will the euro be? What's happening with Brexit? Where's the US economy? To me, the idea that the window will be conveniently open 1 year forward for the ECB to start hiking seems naive. And in fact, the probabilities have been correctly shifting up that the ECB is not going to be able to hike.
Stephen, just one last word on this to give our market participants a hint of what you're looking at. The flow. Yesterday, MLive wrote up and they said, look, a lot of this was people taking their positions out, undoing their hedges in the currency, hence the reason why we saw the euro pop a little bit higher. Is the flow of money done here because a great deal of this debt is domestically held? Or what sense do you get in terms of the flow of money around BTP?
It's still too early to say, Manus, that there's a lot going on, and we haven't got the full picture, have we? It's all at the moment speculation about what might happen next. So I think it's still early stages.